Okay, let's jump into a bit of a weekend review. Where we at? So 12 past 11 p.m. on what are we, the 6th of October. So ticking along into the new month. Well, I think Monday last week was that was the end. So we had so Tuesday was the start of the new month. Moving into last quarter of the year. October, yeah, must be. So end of the quarter as well. Yeah, I kind of overlooked that. But that's not really the main point or the main story at the moment. DXY definitely the main story. NFP actually, in fact, the main story. And that sort of that print on Friday. Oh, this is the thing, and this is what I was saying all through the week. Like if you go back, that was the view that I thought, look, bang, we were coming up here. It played its part very, very well. Measure move after measure move after measure move, target sale, and just kept on going. This is the area that I told you I was most sort of critical of. The idea that maybe we would sort of reject back down here, stay in this range, and certainly look if the numbers supported it, this was a viable option. You know, really, we were at 2 points to be doing this or this. It was, I was saying, like, to a few people during through the videos and that, like a couple of guys that I know while trading, that this is going to be a crucial one. Like, I mean, not only sort of like was the chart at a very sort of pinnacle point, as you can see right here, top side of this sort of like range that it had been in, or it has been in for the most part, respecting since, August, was that started through halfway, three quarters of the way through August, through till, you know, October. So 2 months, although also it's been just sitting in this range realistically, which is what, about 1.5%. I mean, yes, we had those couple little drop downs here towards the end when the print actually came out. That was, remember, that was the FOMC when we actually got confirmation, bang, they're cutting. And this is the thing that I was saying on the weekend, well, not on the weekend, sort of like coming into the end of the week, that, the whole idea of this move coming down here, this is the market pricing in the actual fact that the Fed were going to start cutting. This whole move through here. Actually, the move through here was them sort of pricing in the idea that they're cutting. Pretty much guaranteed, yes. We knew they were cutting. What was happening through here was a tussle between 25 base point and 50 base point. So, that was pricing in the idea that they're cutting. The back and forth here, okay, yep, market agrees they're going to be cutting. Oh, they're going to be cutting 25 base point. Well, okay, shoots back up here. No, actually, hold on, wait. The economic data is a bit weak. They're going to need to cut 50. Comes back down and back and forth and back and forth and that. And so that was the tussle. So you got three parts. You got the pricing of the idea that they're cutting. You've got the tussle between the 25 and the 50 base point. And then when the actual cut comes, this is the move down here. Where was it? That was it was this one here, I think. Yeah, that's a Friday there. So, like, you know what I mean? You got this massive position taking and setting up, and then the reaction of that, of them actually cutting is just like this little plop out the bottom. And as you can see, one, two, three attempts to get down under this zone, and it just was unable to do it. And this is what I was saying. If you go back and watch the videos, I've started titling them. I tried to put a sort of little summary of what was happening, and I said the squeeze is on. And the squeeze has been doing exactly that, pushing straight up through here. And you got to think three times to break down under this level, unable to do it. That's what the market's going to do. Like, again, the question now is the 25 base point or 50 base point. And the fact that the market has been so heavily negative on the US dollar, the pain trade has shifted to the other side because everybody's like, oh, what they're cutting? Oh, they're going to cut by 50 base point. They're going to cut maybe potentially another 50 base point. You know, I do think US dollar is going to come down here. Excuse me. I do think we have more downside to come. But as I said through the week, it doesn't mean it can't do this first. As you can see, that this is the path that we planned out. That if it breaks and comes up here, these price targets up over here, and then we look for the move to come down here. And that's not even a guarantee that it's going to stop here. As we know, sort of when DXY gets on an absolute run, I mean, remember this one down here. This was just crazy. This is just sort of like, this goes to show what DXY can do when it really wants to sort of keep on squeezing and keep on pushing up.
Because if you look at this down here, this gave us a test under 100. And look at the price it was coming down, the speed it was coming down prior to this. It was breaking all these previous levels. Like this is going back with a little bit of history and sort of back testing. Well, not really back testing, but you know what I mean. These are your supports. You know, how many people would have been like, look, oh, look at this. Support here. We're broken down underneath 100, big round number, underneath these things. And what does it do? It moves up, comes down, and for 3 months straight, pretty much. I mean, we're looking at what, July through till, I guess you call the peak October. 3 months straight, it went straight up. And this is like short squeeze stuff. I said this at the time, that this is just short squeeze stuff. Because if you look at sort of how many sort of like, there's no sort of sideways patches like this and then sort of moving up, moving up. This was unrelenting dollar push because, you know, so much of the market was waiting, came down, broke it, sucked in a bunch of shorts, stopped out a bunch of longs, and it just went up. And then sort of people try to short it and it goes up a bit more. People thought, you know, think about it, at this time, people would be going, yep, well, that's where it's got to stop. That's where it's got to stop. That's where it's got to stop. And each time it came up, it reacted at these levels, more liquidity, more short stops above it, and it jammed through again. Did the same here, jammed through again. Did the same here, jammed through the same through the top here again. And this is the reason that I'm actually referencing this now is because flash to, you know, today, and despite this incredibly messy chart, which I'm going to clean up actually a few of these fibs at least, just to give us a little bit of a clearer run. We're in the same kind of boat here, whereas you're sort of potentially going, let's get rid of this, potentially going, yep, this level here, this is where it's got to stop, surely. And then what happens? Reacts here and then goes through higher. It's got to stop here and it doesn't. Got to stop here and it doesn't. So you know what I mean? Like there's no sort of definite top on this move here. I do believe, as I said, the overall sort of idea that we are sort of going to be coming down, back down. But with these sort of short squeezes, and particularly with DXY, once it gets on a run, it can continue for quite some time. And there's no sort of level. And I would say the best way to look for a top in this move here would be the same, if we go back and reference that last push there, would be this kind of thing here. So it's not going to necessarily just come up one big day and then bang and then come down V-shaped recovery. The overall move can be somewhat of a V, but it's going to be a couple of days of trying to go ahead, almost going and then fail and fail and fail. And that's how it's going to sort of come down from this sort of leg here. So you got to think, how can you apply that? And that, like, so basically all that was then was explaining the idea that yes, DXY obviously it's moving up. We probably, well, I expect this to sort of continue a little bit. As to sort of where it comes to, I think this is a reasonable area that we can look for first. As I said, it could see a reaction here. I guarantee it will see a reaction here, but it's a matter of, does it go up, little down, and then just go up through it again? Because this is how DXY particularly works, and this is why I stayed short on Aussie all week. I cleaned up with Aussie this week because I was short the whole time because I saw and I called this move coming because we had this. If you zoom down, let's get back on the 4 hour. If you have a look at this little falling resistance we had here, how many times did the market try to really squeeze it and squeeze it and squeeze it coming down into this little triangle, and it popped and it broke? You know what I mean? And then it went through. And this is what I said. Like, if you watch the videos, this is what I say each day. Like, DXY, when it gets on these runs, likes to put in these fake top signals, or plausible top signals, like this one here. This is like basically equivalent to, you know, coming down the bottom, there's a big sort of bottom wick, and away it goes. That should be a big rejection and sort of come back down like this. But it didn't. It just kept dragging through and pushes up higher. If you go to this next section over here, I called this the other day. This is equivalent to what is a hanging man. So you've got a wick at the top side. That could be a pin bar or whatever you want to call them. Reversal. This could be a hangman. Started to come down. Looked like it could have been rolling over here. It's overbought. This is on the 4 hour. And it goes through higher again. Comes up, hits a resistance, back test, excuse me, of these levels. And then data drops, bang, through the roof. So, as I said, this is what DXY does. It broken this little channel here as well. So it's a little rising support. There's a lot of things that makes people think, okay, it's going to roll over here. No, it's going to roll over here. No, it's going to roll over here. No. And each time people are putting their stops above it. And look at this move that charged up through this one. This is obviously the NFP that drove this one here, but there would have been a lot of liquidity here because you've got this big falling resistance, which has been sort of, started and sort of respecting since back in, sort of end of June. So July, August, September, and now into October. It's broken through there. It's broken through this range. There's a lot of people that sort of like would have been trying to short this thing, trying to add to shorts, had their stops above here, and that all adds to the liquidity. So all that said, I think we do have some more upside with USD. As to sort of where it sort of goes and how fast it goes, well, this is what we got to sort of try and play a little bit here. So if we have a look, what do we have this area for? So this is a potential area we had sort of marked out, stuffed around here a little bit. Just happens to be where we kind of finished up. Well, not where we finished, well, close to where we finished up, but where we sort of found, a top for that session for that week anyway. So, as I say, I pretty much disregard the last two candles, or at least the last candle, but last two candles of the week. So I think unless we sort of just gap up and just open up here, we could be looking for a little bit of a pullback early for a structural sort of thing. Pull this across here. I would say, yeah, a retest of this area here. If we see a little bit of a push down here and we sort of see, the right things sort of balance with it, and then we sort of look for the move up there. That's how I'd be wanting to play it. So that means sort of like, if we're doing with Aussie and we see Aussie sort of, take some profit from those moves, if we don't see it explode out of the blocks, look for some early profit taking. Because people are holding the positions over the weekend. I mean, look at it. It closed right up the top here. They weren't giving anything back. So people are holding it over the weekend because you got the Middle East situation kicking off a little bit more. Even though I don't think that's the main massive driver, it does seem to be escalating. We got a big anniversary, 1 year anniversary for the stuff tomorrow as well. I think that's going to weigh into it a little bit. But I think the people that are going to be holding this move, because if we look at this on a weekly, that's a big candle. You can see here, those body fills of down here. Body fills don't work this way, but that was the reason that we had this little level through here. So that's a big bullish candle there. And also you got the RSI. This is on the weekly. So you got the RSI ready to support this to potentially, if it gets on a run, we could be moving back up 104. If you look at this on a weekly basis, this is a pretty smooth cut through here. If we can get back above this level and sort of start to charge over here, I reckon we could see a little bit more. I think, as I said, 103 to 103.50 is my first sort of light level that I'd be interested to sort of take a little bit of an opposing view, view position against the US dollar, but I'm certainly not going to stand in front of it straight away. I don't think we're going to go straight back down here, but anything can happen, of course. But you got the RSI supporting it. That's a big bullish candle. As I said, you've got that sort of Middle East stuff, if that's going to be sort of playing into it or not. But more or less, it's sort of like, as I said, they had strong numbers, and it was a big miss to the top side for the NFP. Like, they were expecting pretty much flat numbers, 142 to 144, like previous to expected, and they came in at like 240 or something. That was a big miss. And it plays into the idea, and this is the reason that it took off, that people are going, okay, well, if the economy's really stuffed, we're going to need to cut more. The economy's not stuffed. Well, at least from that one piece of news or one bit of data there, people are hiring, and they're hiring aggressively, and they're not sort of like worried about stuff as much because again, you got to ask yourself, do you hire, like if you're worried about being able to pay your bills and pay your staff and, keep your business and the doors open, the lights on next month, do you A, sort of go out and hire a whole bunch of people, or do you B, hunker down and work with what you've got? You do the latter. You'd hunker down and do work with what you've got. So, the opposite is obviously true then. So it means that sort of like if companies don't need that helping hand so dramatically, well, the Fed's going to be thinking, well, you know what? They're doing okay. They could probably survive with just a 25 base point cut. And with that, it means that the market's probably extra positioned for another cut, and bang, it moves back up like this. Remember, they are still cutting, and this is why I do think that we are going to come down over here. But a lot of the market is positioned for this to come down here. They've jammed up here. The pain trade is up over here. All the liquidity is up around over here. So they've got to take all these things out first, then they'll roll over and they'll sort of come down with it all. So, as I said, I think we could potentially see if we don't rocket out of the gates, I'll look for people to go, okay, well, I was holding for a big Monday morning payday. It didn't come. Let's just play it safe and lock in what we've got. They'll sell off. You'll see a little bit of a move back. That's when you get the other people step in. They'll swap and change hands, and they'll go, look, nothing's actually changed. You've just got the people that held for the payday. They didn't get the big explosion, straight out of the blocks. They took their profit, came over here, okay, and then on with the story, on with the game. And that's when we'll sort of look for a pullback to, 102.20 or so. This kind of zone down here. It could come deeper, who knows? But as I say, I don't think it'll be super deep. But I think unless we get an explosion out of the gates, we look for a bit of a pullback here, and then we try to take the positions in accordance with these levels down here to then get back onto US dollar strength moving forward. So I think, so certainly US dollar strength, and I'd say just you keep hammering those positions till you get up. Well, I'm going to keep hammering those positions till I get up into the zone over here. I'll be trying to take some profit as we get into these zones because the market will react here. It's reacted and sort of knocked it back down over here previously. So we are going to get a reaction over here. As to sort of that being a top and it roll over, well, I just showed you on the weekly, it certainly looks like it could want to continue for a bit. So you may get 1 or 2 days of pullback here. Maybe you get something that comes back to, these previous highs that we've got marked out now, and then sort of reloads again. Who knows? We'll have to play it by ear as it gets a little bit closer to it. But, you know what I mean? If, as I said, like this big whole move from coming down in June, we're just at 38% now. Actually closed right on the 38%. So a little bit of a pushback. I think realistically, that's looking pretty decent. 61% pullback. You got these previous supports over here. I reckon this will be definitely an area of interest. I think maybe what I've just marked out is almost a little bit too obvious. A little point. Put these here. Maybe this is too obviously obvious a point. Like I sort of said with this part here, there's a lot of people who thought this would be the spot, and it was for a day or two, and then it charged through, came back, retested, bang, and on its way. So, it's no guarantee that this is going to be a top here. It's just a price target for me. I'll look for the reaction here, and if it decides to charge through, we've got other levels that we could be looking for up above that, but that's not going to happen on Monday. So, we'll deal with that one as it comes. But this is the immediate here that I'd be sort of looking for with DXY. Flip across to Aussie because obviously Aussie very much a beneficiary of, well, beneficiary. I don't know if it was very very much impacted. Beneficiary in the other way, negatively beneficiary. Anyway, whatever. It's got knocked back here. This is on the other side of it all. Like, I drew this channel here potentially because, it kind of seems like it may want to sort of line up. It may want to give us a pullback down here. I've been touting that I'd like to buy it around the zone here, but as I said, I just don't think that we're quite ready yet. This is my area that I'd be looking to probably try and get a little bit long on Aussie. And this is what I was saying. This is how I think things could correspond. We could see a little bit of a push up early, a little bit. If we don't get sort of fireworks straight away, look, things could fireworks and could gap down, and if gaps down, it'll go back up anyway. But I think this will potentially see a little bit of a push up, 68, maybe try and get back above sort of 68, sort of 15 or so, back to that yearly open line. That's probably a fairly decent level that people will be watching, 68.11. And then if it takes out its lows and flips and takes out yesterday's or Friday's lows, then watch out below because that's the continuation. We're going to see that next drive down. Again, generally when these things are going to turn around, I'll turn these off for 1 second so you can see. When these things turn around, you get long candles, long, small candle pullback, small, 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 and we change. Small, 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 and we go out. Small, 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 and we change. You don't generally get bang and then V shape straight back up like that. I mean, obviously this one did here, but this is just a down day still in a uptrend. If we put this back on here, we can see that obviously we've got we've got a lot of lines. That's what you can see. You can see that you broke this channel through here. Put this onto the 4 hour, you might be able to see a bit better. Whoops. We broke this channel, and that needs to be respected, and that's what has been happening now. So where are we at? We're at the 127 of that last kick up. So we've completely taken that out, gone down to the 127. We've gone down to this grey zone through here, which was previous highs from the sell down in July. This has been very turbulent the last couple of months. I mean, look at that. That's your V shape. Boom, boom, boom. So I do look, as I said, I think we have some downside to come on Aussie, continuation of US dollar strength. I would look to sort of get the buys happening around here, start to build things as a buy around these kind of zones, because I think that eventually US dollar is going to run out of steam because the cuts are still coming, and we could sort of see a resumption of US dollar weakness, and particularly you got to see we've got the minutes coming out on Tuesday for the RBA, so that's something to be aware of as well. Trading Aussie, are they going to sort of maintain this sort of very hawkish tone with everything? Because that's the thing that's kept Aussie elevated, well, somewhat elevated. The fact that you've got the sort of the mismatch of the two currencies, mismatch of the two sort of central bank outlooks, one being the Fed, which is dovish, and the RBA, which is hawkish, and so that's sort of kept us elevated. But if they sort of turn dovish, watch out for Aussie, man, because as I said, one of the market's favorite pastimes is to sell Aussie. So, and when it falls, it can fall hard. So we saw sort of Friday, like if you have a look at the Friday through here, very tight sort of consolidation, up, down, up, down, up, down. And then when that went, bang, it got absolutely pulverized. But this is the thing, like as I said, I've been shorting Aussie all through here, all through here. I went into this meeting fairly light. I had a couple of positions. I had more metals, actually, to tell the truth, which I'll get onto in a second. But I only had a snifter of a position of Aussie compared to what I'd normally be holding, just because it was so, as I said, it could have gone both ways. Like, it was at a very crucial point. This very much could have easily just been a rocket candle back up over here. And it turned out that they added 80,000 and that people were talking they're going to have to do another 50 base point cut. But they didn't. And that isn't how it turned out. And it came down here. I closed out my positions. It actually closed on the low, so it wasn't too bad. But if you look at metals, like I closed out everything and I was like, boom, I'm done. And I looked at metals over the weekend. The move on metals was insane after that. It was huge. I think silver put in a new high. Gold tested all-time highs. Like something was happening. But that's not my style of trading. I'm in and out, and I'm out, and I was done. So, yeah, well done anybody that caught that. But as I said, look, I still think US dollar's got a little bit of strength. I think Aussie's got a little bit of downside. If we see a bit of a push up, look, as you can see, yearly open here, it was that little wick area that this last 4 hours, second last 4 hours, trying to touch. Don't worry about the last hour or two, or this last candle here, because nobody's at their desks and doing anything there. But as I said, if we get a push up early, I would be very surprised if this sort of V shapes and comes up here. Look, anything is possible, so you got to be prepared for it. But I'll be looking for any sort of push up and sort of strength up into sort of like, this kind of areas over here. if we can sort of like match this, oh, jeez, if we can match this to here, I'd be happy to sort of get short on this for another push down here and targeting 67 at least, I'd say 67.20, and then try and sort of maybe work out some buys coming in this area over here. You know what I mean? This is 61% on, it's a 161 of this push up here, and this is the 61% push of this whole drive up from September lows. So it's starting to bring it back pretty quickly. So look, it's not going to come down all the way down here straight away. But I would say we've got to push up, another push down, and then we could be looking for some more sort of medium term rebalancing of it all. But we'll have to play that as we sort of come to it. This is just about sort of getting a plan for the week, and in general sort of feel for what the markets are doing in terms of basically risk and flows. And we can see where the markets are putting their energy. So I flip across and we've got gold. And this is what I was talking about. If we jump onto a lower time frame here, look at gold after this. That was the move down here. I was short gold, short silver. Came down here, bang, beautiful drop. I mean, look at this candle. It's 56 down to 32. What's that, sort of 20, 24 bucks, 25 buck drop. Bang, tick, tick, tick. I was out, I was out, I was out. And then, I had a look at it. Silver was even worse. Have a look at silver. Silver is insane. From the lows, like this it's gone in two waves. Silver went nearly 5% from the low to the high. So that's NFP, that's your bounce, a little bit of a stuff around, and then just jammed again and jammed again. So what time is this? So when US markets are opening, it's at 12:30, I think, it's local time. But that's massive. That's insane. But this is why I trade the way that I do. Like, sort of, people sort of say, oh, okay, get down into profit, cool, put your stop to your even, or just reduce the risk or whatever. There was nowhere to move this a stop in here in which you could still make profit, not get stopped out for even at best, or take a loss, because it just didn't level down enough. It just went down and straight back up. So, I mean, it's a tough thing, but that's it. That's why I trade the way that I trade, because enough times that I have tried both outcomes numerous times, it's incredibly frustrating to have these massive moves, be positioned, get it right, and then just get wiped out for it all or make nothing. You miss the ones that run for 3 weeks or so, but whatever, you can still get in and out of those trades. It's just for these one rocket moves, I'm in, out, done, bang, move on. So it's a bit hard to really sort of call what. So gold didn't get right up to the highs. Where did it get up to? 70. Still, I mean, if anybody was short all through this period here, or if they'd sort of got short in this period, bang, let's reduce our risk, put it to here. They just got taken out and then boom, back down here. So look, realistically, it's a very tough call. There's nothing you can like. It's just sideways now. I mean, as I said, look, we kind of had this bit of a triangle setting up, but obviously it tried to test out the top, test out the bottom, test out the top, still closed in there. So I think this is still what we're kind of looking for here. We put this on maybe a 4 hour. How did it close here? Yeah, this is a tough one here, because we are really at the highs, and it's obviously being met with some strong selling, but just as quickly they're jumping back in. And this is why we mark the levels out, because if you have a look at sort of where have the buyers been previously, down here and down here, and this is exactly where they stepped in. That's a body fill through this whole move here. Bang, filled the body, rejected up, and as I said, that went from 32 back up to 70. So, I mean, realistically, if you're a sort of sniper trader and you're like, all right, cool, I want to buy the lows, that was the rocket move. And we've, again, put it on at a lower time frame, you can see, look at the bounce on this thing. Boom, straight back up, bang. And the thing is as well, which is what is interesting with this is that obviously DXY had a massive breakout. So this is what we need to sort of start to think with gold, because as I said, 90%. I work off the rule of 90% of the time they run inverse, and that's their true way to act within the market. Gold up, DXY down, vice versa. But we've seen gold stay elevated. It has obviously been affected, because obviously as that data dropped, US dollar took off, gold got dumped. So it was acting like that. However, gold's obviously flicked back up to the top side and just stuffed around, and that hasn't really gone anywhere. I mean, the data dropped at 56 and it closed at 53. So really, it didn't go anywhere. I mean, if you look at the day, it'll be a massive doji or so. Yeah. So realistically, it didn't do a great deal at all. It's a big, massive tussle between buyers and sellers, but overall, it's still at the highs. It's not getting sort of knocked right down. Like if this was a couple of months ago and things were running, as I said, in that 90% mark, gold would be down over here, 25.53 or whatever. 25.50, that's a bit of dyslexia there. 25.96, but whatever. It's an arbitrary point that I just picked out. The point being is that you would have expected to see gold. Like if we put these side by side, put there's gold on DXY. Some can be gold. Put them on the same time frame. Those on the 1 hour. But you can see the little dotted lines on each graph, so you can see how it represents it. DXY, massive push up to the top side. Gold, big push down to the bottom side. That's fine. It only took DXY to come back from 62 to 48. A very, very small part of that. It's probably not even a 23% fib. Like at the time, that's the move. Came back to the 23 fib, and gold had already undone its whole move. So when you notice things like this, you can tell that's the period where you've got a bit of disconnect. And it's not running as like it's not always going to be perfect one to one, but it's a pretty close relationship. And that's the thing that you got to think that sort of like how couple of questions that I sort of think from this. All right, let's go back to one chart. How long can gold withstand US dollar strength? Eventually, if US dollar keeps going up and up and up, is gold going to crack and then fall back? Because remember, as I said, 90% of the time they run inverse. So when they're both running at 10% in that 10% period, um, one of them's lying and one of them's going to come back. I mean, it's not purely like okay, that's the only thing that sort of weighs into sort of how gold's going to move. Of course, you got all the sort of Middle East stuff which could be weighing into it, or definitely is weighing into it a little bit or somewhat. But if the questions I'm sort of asking or thinking to myself, if DXY keeps going up, how long can gold sustain before it falls back into, okay, DXY is still going up, gold, bang, let's take some profits out of gold. Because that's the thing, remember, you're picking where the flows are coming from. And if people see US dollar go, 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 and they're in massive profit over in gold, well, what are they going to do? They're going to take the profit off their gold positions and jump onto the thing that's moving. If gold's just moving sideways and DXY is going up, well, where's the money? Where's the flow? Where's the profit going to come from? Well, you can be in this asset which is doing nothing, or you can be in something that's moving up. Well, obviously, it'll go into DXY, and that'll cause gold to come down. That's one way of it. The other sort of flip side of this is that gold maintains for a little bit. US dollar has its run. US dollar comes back down. And then once the sort of like, the people have had their fun, the USD fanboys have had their fun, and they sort of like go, okay, yep, we've had a little push here. We've snapped everybody out. Let's go back to selling US dollar. If gold is still maintaining at the top up here, so if gold doesn't crack and come down, and then US dollar goes up, and then US dollar comes down, DXY comes down, that's when you're going to see gold break out and it's going to move to the next level. So look, to me, that makes perfect sense. Don't know if it doesn't make sense to anybody else, but that's how I'm viewing this at the moment. Because the flow is what we're all about. Where's the money coming from? Where are they going to put it? Where are they going to sort of get some sort of return? And as I said, if gold's not doing anything, part of them, it's not like everybody's going to go there. It's not like the whole market's going to go back down to 2200 or 2000 or whatever. But you are going to see portions of the market go, hold on, wait, I'm not making anything here. I've been buying gold all the way through here. I'm in massive profits. Let's book some of that profit because gold's not breaking out. US dollar is. Let's put our money into the US dollar. Let's make money on that. And then, gold comes down. They could take their profit out of US dollar and then buy gold at a cheaper price. US dollar comes down, gold goes back up. I mean, yeah, gold goes back up. Like that's the flow. That's what we're looking for. And as I said, if we do see the other side of that where US dollar doesn't move, gold doesn't break down despite the US dollar run, and then we see US dollar break down before gold breaks down, then that means all that flow is going to come back out of US dollar. It's going to find a new home. And yes, part of it will go to euro, part of it will go to Aussie, part of it will go to the pound, these kind of things. But a good section of that will go to gold, because remember, gold is still super, super bullish. And most likely we're going up to 27.50. They'll sort of jump on that and they'll go, well, I've made my profit from US dollar. Now I can buy even more gold. And they'll get gold, they'll buy it, and it'll go through the roof. So for gold, that's what I'm really looking for, to see if it breaks down first. If it does, that's fine. Have a medium-term trade of a short side position. Look to buy it down at these levels over here and wait for US dollar to sort of peter out. Once US dollar peters out, then we start to get long on gold again, and we ride gold for the next wave moving up. That's my plan of attack. Silver, pretty much the same story. I mean, that just popped in a new, well, technically it's a new 3-week high, but I suppose it's technically actually no, it's a new what's called 12-year high or whatever it was. But again, this is a retest of this little underside here, and it is still pushing up, and it's still moving quite strong here. So despite all things, it was putting in high lows and higher highs through this section. So we can start to do something like this now. I don't know if I particularly like this line, but it's what we've got to work off at the moment. Something like this. Yeah, let's just line up. No, not very well. No, nothing. I don't like that. No, basically what I'll be working off with this, even this line I don't particularly like, because it's only got 2 touches and it's just so all around the shot. Maybe something more like that I'd actually work off. Yeah, so something like this, we could drop this down, we could give ourselves another band down here, and now we're starting to get something where it could potentially, because you've got this little area through here, you've got body fill, like where it closed from here, you've got a low down here. This is kind of a bit choppy, I'm not a big fan of that. But down in this zone down here seems to be a happy sort of little buy zone. Came down here, they rocketed it off. Came down here, rocketed it off. So how do you trade it? You trade it, you wait for this to break if you're looking for downside moves. Or if it comes back into this area, you look for a buy. You look for a time for it to sort of do the same thing as it has done here, here, or potentially where it just even touched it, just here. Somewhere in that zone there. And you try and sort of get that, use that for your sort of your push off to do that. I mean, that's a plausible move as we've sort of seen it happen a couple of times. I might attempt at this. No, I don't like that line. But that's how I kind of see that. It's really quite an ugly chart. It's very, very, very sort of wild with its swings, isn't it? I mean, look at these highs, lows, up, completely undoes it. Breaks up, completely undoes it. Comes up, didn't completely undo it, but came back down there as well. So yeah, it's not an easy call with metals at the moment. And this is what I mean. Like I think that sort of this DXY sort of push I think is potentially something that's going to continue for a bit. And I don't know if metals are going to be able to sustain it if it does continue to push higher. I think the metals will eventually crack and it will give us sort of some buys back down around these sort of 30-31 areas. So I don't think that this is the full thing here. One thing that I just noticed just now as well, if it's on the 1 hour, let's have a look on the 4 hour. Yeah, 4 hours, it's tipping over a little bit there. But again, look, you want to see a close up above here. Close at 32.50. That'll be the signal that we're going higher. These top wicks here and just getting smacked in this top area over here, which is again the top areas from back in May, you need to see it close out the top side there. Because at the moment it's tried to go out a couple of times and it just keeps getting slapped on the head. Anytime it comes towards 32.40 or 32.25 to 32.40, this kind of zone over here, market's not happy with it and it's just pushing it down. Seeing this RSI roll over a little bit. Again, last couple of hours you don't really worry about too much. The 1 hour though definitely was not painting a perfect picture. Like through say these highs down to there. We call that, say, a negative divergence. And then you have a look through this over here. That's, obviously a negative divergence and it got smacked on the nose. But the thing is, because it's on a 1 hour, whoops, what just happened there? Because it's on the 1 hour, the reaction is going to be equivalent or sort of like, similar to basically what the time frame that we're looking at. So you're not looking necessarily for a full top signal off a 1 hour chart. If you've got a negative divergence on a 4 hour or a daily, you could expect more trend changing stuff. But 1 hour, the reaction can be a couple of hours and then the negative divergence has played out and there's not much more for it. So yeah, metals are very much a tough one at the moment. I'd be reluctant to buy them up here. See what happens with the Middle East situation. I think if that sort of kicks off more, then we may sort of see metals at least stay elevated. But I think it's going to take a petering of the US dollar before we're going to see a leg higher. But once we do, I think 2,700 on gold, 2,750, I think 34, 35 bucks on silver. So I do think long term we're coming up here. However, I'm wary that, we may potentially sort of come back down over here. And this will offer some pretty good buys. If we get back down into these zones here, you can even look for a large range through here, really. So, but for confirmation of downside, I think through this channel here, as we can see, it's had a couple of touches back and forth. Once you break here, then I think you'll see back test and then a move back down to the 31 kind of level. We've got copper. Copper not really doing a great deal. Really still just sort of consolidating the highs here. Copper kind of shook off what was happening on the weekend, on Friday, sorry. NFP, didn't really worry too much about it at all. So not a great deal to do with copper. Consolidating the highs. Really, I mean, it's holding this zone through here. Once it breaks through this little zone here, we could probably be looking for a little bit of a deeper pullback, 38 and 50, maybe around this 50%. 50% mark lines up with these previous highs over here. 38 lines up with these previous highs over here. So they're the two levels you'd probably be looking for on a break of 4.54, that kind of zone that we've got through here. Look, alternatively, if it pushes out the top, all the best to it and that. But as I said, I think it's probably got a little bit of a pullback before it does move up a little bit higher. So you got China finish off. China, boom, took out. And this is what I was saying on the weekend. Well, not the weekend, sorry. I was saying before the thing, it is a completion. We've had a head and shoulders measured move through here. And this is what I was saying. See how this is what I call the cross chart confluence. You've got the same, everything's lining up, coming to its crucial point at the same time. You had US dollar on DXY coming to a point where it's hitting its falling resistance, coming into that sort of thing. It had a horizontal just above it, and bang, it exploded. And of course, you see that reverberate across the markets. So we had that inverted head and shoulders measured move that played out. That gave you the target up to the top side over here. Again, if it explodes out in Monday morning, bang, it moves up over here. Great, whatever. If it doesn't, look for the pullbacks. Look for these areas where it sort of comes back down here, reloads as a support, 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 break through, resistance, break through. Look for it to become a support again, and then move up here. And I'd expect probably a little bit more sort of US dollar buying across the board. Again, this is going to be the thing that, again, like I said, sort of weighs on Aussie, sort of moving forward as well. So it's something to look out for with Aussie there. All right, so that is pretty much it. What do we got? 45 minutes, and I'll have a quick look over the news. We do have, as I said, RBA minutes on the Tuesday, I think is the main one. Where are we at with the dates? September into October. This one here. Inflation gauge. Yeah, I'd love to tell you. Geez, they're still on holiday. Plus, we've got a lot. What bank holiday have we got? So I think you never have a clue what bank holiday have we got? Okay, not quite sure. Maybe only some banks. Whatever. Um, Bank holiday. We got China still on their break. They must be coming back pretty soon. It's going to be interesting how that sort of comes back to the markets. Again, with that sort of A50 or whatever it was, really screaming high. Are they going to come back and book profits straight away? I think so. So I think that's again going to weigh on risk. Apart from that, nothing really sort of stand out news-wise. As I said, Tuesday you got the minutes from the RBA, so be watching to sort of see if they're coming out and maintaining that sort of sort of strong hawkish kind of talk. Um, Now business confidence seems pretty low. Advertisements low. No expectations on these two. Moving forward, got a couple of speakers. Nothing really sort of jumping out though. We got the Fed minutes on Thursday morning. That could move things a little bit. Yeah, maybe just sort of reaffirming the sort of their stance of sort of what they're doing moving forward. I think pretty much the conversation with them is a 25 base point and 50 base point talk. So I imagine that to be elaborated on. Um, Excuse me, when they had their last meeting. Interesting thing actually to look out for with the RBA minutes as well, is the fact that they had the rate meeting one day before CPI. So that was whatever it was last week or the week before. So yeah, that'll be interesting to see what they have to say there. Big cut expected in New Zealand. Okay, so this will be worth taking note of because Aussie by proxy gets affected by New Zealand's stuff. Like it won't be as affected, but if they cut by 50 base point, even though it's expected, so maybe you'll see some positioning for that prior to it all. You'll see that happening, and as it happens, you'll see a bit of a weakening of Aussie as well. Watch when this one happens, and we'll follow that one on the Wednesday. As I said, you've got the Fed meeting there. We got core CPI right down 2.3%. This is pretty much enough. Two prints under 3%. That's pretty good for them. There's going to be sort of touting sort of beaten what's it called, inflation. So yeah, they've really sort of got back on top of things there. So they went hard. So yeah, it's got the job done. GDP out of England ticking up a little bit, so positive for them there. And then we got PPI into the end of the week, and again, sort of a slight tick down. But these are the kind of ones, as I said, these bits of news, they're just like pieces of the puzzle to put in there, as to sort of try and tell sort of how is the strength, with the US economy. A strong US data is going to see a continuation of this US dollar strength and this US dollar push because it adds into the narrative. It adds into the idea that, okay, yep, we don't need the 50 base point. We only need the 25 base point. And, we've been pricing in all these, 100 base, they were calling 100 or 125 basis point, sort of in, by the end of the year, which is, a lot of cuts. They're at 50. I think they have three left. Don't quote me on that. Two left maybe. So that if they've got two left, that's a 50 and a 25. So if that is the case. So yeah, going to be an interesting week. US dollar strength is what I'm going to be mainly playing. Okay, that's it from me.